Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're delighted to have this first-time visitor tonight. Brandon White is a business development manager for monetary policy analysis at BMG Group Precious Metals, a company in Canada. His background is in precious metals, and he's licensed in the private equity sector. He has experience starting a gold mining resource exploration company. He has experience being in the bush, staking claims. Brandon, thank you for joining us this first time on Reluctant Preppers.
Great to be here.
You caught my attention with an article that you published on LinkedIn recently about if you want to approach people that you care about regarding preparedness and risk reduction, you said don't go in with your full tinfoil hat on. And I was hoping you could expound on that for our listeners and viewers about what ways are overpowering or kind of can be off-putting for people when we come on. Those of us who have been kind of steeped in alternate information, alternate sources of information, and basically unplugged from most of the, quote, mainstream or corporate sources of information that are trying to form or maintain confidence of the masses, can easily become so accustomed to a different mindset and a different reality that we've realigned ourselves to and aligned our lives around, that it can be speaking like a foreign language sometimes to people when you meet them, and you don't want to come off as sort of eccentric, that sort of thing. So in your article, you took a very lighthearted approach to that, but it's a serious topic because people have family members, coworkers, loved ones, neighbors that they really do care about and they want to be able to reach out to. So what are some of the things the principles that you expounded on in that article? And by the way, folks, we'll put a link to that article in the description of this video.
Wow. Okay, great. I guess probably one of the best ways to learn in life is by other people's mistakes. So maybe I should share a few of my blunders that sort of got me really quiet in trying to talk about this subject matter with friends and family because of, I guess maybe at one time, as relative to when you kind of sort of fall into the gold story and the need to be prepared for a multitude of scenarios, sometimes you can be a little more enthusiastic than you need to be to convey the message. So that was kind of my mistake, being more enthusiastic than I needed to. So I found that being very, very calm, cool, and extremely reserved in terms of how much information, because really I felt I wanted to show up and throw up everything I knew, and of course it just, it doesn't work. Maybe I'll share my first really, I guess, the first lesson that really stuck with me. And I'd only been working in the securities industry in the gold business for, I don't know, a year, maybe less than a year. And so my ex-wife's uncle had heard that I was working for a gold company. And, of course, he'd been brainwashed like so many others. And that weekend that we showed up on the back patio to go for a swim, the first thing he did was throw down a copy of the Saturday's edition of the Toronto Star, which is kind of like one of a mid-level newspaper in terms of education. It's fairly left-leaning. And in this article, this journalist had written, 250, 350 words on the subject of gold and how it was useless and there was no reason to own it. And I kind of scoffed when I looked at it, and I read it quickly. And I tossed it on the table. I said, well, these journalists, they're paid to write. They're not paid to understand. And this guy doesn't really understand gold at all. And so my ex-wife's uncle asked me, well, you think you do? I said, yeah, it's really not hard. All you have to do is ask a couple basic questions. He said, like what? I said, well, where does money come from? What gives it value? And of course, immediately his response was, well, nobody knows the answer to those questions. So I thought, wow. So yeah, that was kind of my first introduction, and I think it was the same family. Less than 2 weeks later, I actually got them to admit to being willfully ignorant. They didn't want to know. It's really disruptive to their worldview when you throw this stuff out at them, because that's, nobody wants to deal with a problem. Most people don't. That's human nature, I guess. They don't want to deal with a problem until they're forced to deal with it. It's, blinders on, which is kind of weird when you look at everyone who owns insurance. It doesn't seem like it's a doom and gloom mentality when you insure your home against a fire, or you have life insurance. You get up in the morning and are you mad that you're still alive because you invested in life insurance?
I think it was George Carlin who was lampooning that. He said something like, life insurance is a very strange thing. He says, it's like going into a casino and if you live, you lose. You die, you win.
Yeah, well, I love George Carlin. I was a fan of his since I was pre-puberty. He's bang on. It's I think the reality in approaching people with this is that they have a worldview, and when you inject the subject of what gives money value and how do you prepare against certain eventualities, they haven't done anything about it, and maybe there's a little guilt there, or maybe they just don't want to talk about it because it's unpleasant, or a combination. But you're really disrupting a worldview. So if you can couch it in other ways, just say, be prepared for all kinds of different stuff. Life throws you curveballs, and it doesn't have to be so extreme. I mean, I love the term reluctant preppers, because in a way it exactly describes that. Like we don't want any of these eventualities to happen. I think there's an old proverb about how it's a wise man prepares and a fool goes along pretending like nothing bad's ever going to happen. I forget the exact parable, but it's kind of like that. And so, we get up here and we get some pretty wicked snowstorms. You could be holed up for a few days if you've got no access to, even a couple cases of water could make all the difference. So you don't have to drink the water out of the toilet tank. Or a water filter if you wind up with happen to be on a farm and have a well. If the well water was to become problematic, you have to have some way to filter it, or whatever. Have some cash on hand. So this is kind of interesting. That it's a great opportunity. So there's so many different spectrums, I think, in terms of preparedness. Just from the average Joe having house and life and car insurance and some cash in the bank and some savings. You'd be surprised how many people have none of that. I guess probably a byproduct of the state of the economy as it is right now. A lot of people just simply going mouth to mouth or week to week, paycheck to paycheck. It's really hard these days for a lot of people to put money away. But if you were able to put $20 away over the course of every month in a year, you may have enough to get you through a few days of problematic. Like say the debit card stopped working for a few days and you need some cash, or if you have no problem with guns, it might be a good idea for you to, learn a little bit about guns and maybe learn how to hunt or fish. If you don't like shooting furry animals, learn how to fish or grow a garden. I mean, these are all they should be supplemental, things to your lifestyle, not necessarily full extreme, move out to the middle of nowhere or live in a silo. And that kind of as well, I think a lot of people that get into the gold story, they get in too deep, and they forget that, eventually you'll be right. The U.S. dollar will be removed as the primary reserve asset, and just like the British pound did, just like the Portuguese currency, and like these things transition. But are you going to live long enough to see it? Mm-hmm. So you got to be balanced, I think, and in that discussion, being balanced with family and friends in whatever aspect, whether you're talking about gold or other preparedness measures. And I think one of the best things would be a little self-deprecation and some humor as well. Humor is an amazing tool. You've noticed, it seems like we seem to have lost our sense of humor. I look at a lot of these sort of political identity politics out there, and everyone's so offended all the time. If we just had a sense of humor, maybe most of the stuff would just go away. Just laugh it off. Okay, maybe I'm somewhat toxic masculine male. Okay, well, sue me. I'll work on it. How's that?
It doesn't look like you've been using your Gillette razor very often there, bud.
Oh, geez, don't get me started on that commercial.
You mean one of the things you mentioned was about what could be the possible reasons for people's concerns a hesitation, on discomfort, that sort of thing. A couple of things occurred to me. One that I know for sure is absolutely a factor at play in our current world, and it doesn't have, you can say it's a conspiracy, or you can say no, it's just human nature, and that's sort of like learned helplessness. And now the more and more when you go to the doctor's office, they'll put a blood pressure cuff on you, and they'll walk away and go do something, take some notes or something, while the blood pressure cuff automatically pumps up and does the whole cycle and then stops. So how many of us have been using the GPSs to get around, and automatic transmissions and everything else? Now, how many of us really know how to drive stick shift, and how many of us really know how to navigate with a map and a compass or whatever and not use? So you just become accustomed to these tools, and you just don't know how to do the manual method anymore. So a big phenomenon, a mega phenomenon that's happening in our world and in our culture that causes people to forget about and disconnect from real money like gold and silver is just that we become so accustomed to these new, debit card technology or credit card technology or cardless, pay online, pay as you go, touch pay, no touch pay, whatever. And as you pointed out, the day that those systems get a glitch, all of a sudden it's like crisis in our lives. And on our channel, we've recently had a big upsurge in people searching out our EMP, electromagnetic pulse videos. We've had a NASA scientist on talking about that. Somehow it just keeps getting reposted and reposted because the traffic keeps going onto that video. And it was occurring to me as I was driving the other day, if there were an EMP right now that disabled all kinds of equipment, I was thinking, because we live in Ohio, and we often visit central Ohio where there's a large Amish community and Mennonite community, and I just thought, a member of the Amish community, they would wake up one morning when there'd be an EMP. They wouldn't even necessarily know that it had happened, because they weren't going to hear about it on the radio or the television, and their cow was going to start up just fine, thank you very much, and so is their horse and their chickens and everything else. They're going to have food, they're going to have breakfast.
What a perfect metaphor for where we're at societally. And maybe this is a great segue to talk about the monetary policy research that I do that helps out. So most of the investment professionals that I serve, they have such a broad range of investment products they have to follow. They can't be experts in one. And of course, there's probably nothing as more complex as what these central planners, represented by the policymakers at central banks and at the central bank for central banks and such. I mean, it's so complicated that it requires so much time reading in that. But what I'm trying to blend and make a good segue to what you were saying. So from a societal perspective, what you're stating is clearly the decline in individuals taking care of themselves, the self-reliance mentality. I mean, there are few people out there that would even understand what Ralph Waldo Emerson was writing about when he talked about the spirit of what it meant to be an American. And there's a lot of that in Canada, outside of the urban centers still, that spirit of ruggedness and individuality, because if you live in the country, you're not going to drive half an hour and into town and a half an hour back just to pick up a carton of milk. You're going to make a list and make a bunch of things. This is kind of the mentality. So these people are more dependent on their own activities, and the same thing goes in the investment world. The investors are so dependent on money managers that don't really have what I believe to be a strong understanding of macro monetary policy and how that relates to not just gold, but it's surprising how many investment professionals have never even heard of the SDR, or if they have, they don't understand what the SDR is, this international currency that's only used between central banks representing their governments. You or I as an investor, we can't actually own one of these currency units, but they are very, very important in the banking industry, and all of these central banks that are representing the governments, their biggest primary concern is their fear is a loss of faith in the general public in the utility and the value that private central banks afford in individuals. It's this twisted relationship that they're doing the best to maintain order in the system, but the problem is that every solution they come up with denies the system's inherent ability to correct itself, and it makes the problem so much better, or so much worse. I mean, it just keeps compounding, right? Since the last crisis, the the chairman of Rothschild, Rothschild Income Trust, I think is what it's called, Rothschild Income Trust. So, I mean, here's the benefactor of several generations of banking expertise, and even he said in an annual statement to investors and shareholders that, look, we're in unprecedented times, uncharted waters, and unprecedented monetary policy. We don't know how this is going to end, and I think he's kind of actually probably far more aware of how it's likely to end than the average individual because, he's got that generational mindset. I mean, the Rothschilds have been investing for their family with that family generational mindset. That's why they own gold. And that's why governments own gold and central banks own gold. But, we seem to have the attention span of a gnat these days, and that's why most people don't own gold. And, the last 3 years are going to be exactly what the next 3 years are going to be like. It's kind of like... a microcosm of what you're saying, just so many people not taking action for their own lives in the ways that they can. You won't be able to do everything, but I tell you, having a pantry stocked with food with 3 young children, when I finally got around to doing that, I felt like I'd just taken out a $10 million life insurance policy, like maybe even better. Not to mention the smell from all those dryer sheets was good for 6 months. Precious room in the house.
You mentioned central banks owning gold, and I really wanted you to zero in on, because that's the other topic we wanted to talk with you tonight about, a second article you wrote called "Gold Re-Monetization is Much Closer Than Many Realize." If you roll back the clock to where Congressman Ron Paul was across the table from, I believe it was Ben Bernanke, head of the Fed at that time in the U.S., holding up a silver coin or a golden coin and asking, "What is this? Is this money?" And the answer, no, that's not money. Well, why is it so important? Why is it so revered? And the answer that Ben Bernanke came up with was, well, it's tradition. It's just tradition. People are interested because of tradition. And yet there seems to be, like, people have the saying, speaking of proverbs, something like ignore the words, follow the money. So what is the truth if we're being told, keep your eyes on the stock market, that's where the wealth is, or keep their eyes on your home value of your home that keeps going up and up, rather than, no, don't look over here at precious metals because they're not going anywhere up. They're not going up in price significantly over the past 8 years or whatever. But at the same time, what are central banks doing with their actions that speak louder than their words?
A number of things. Canada's an anomaly. It's very bizarre. We got in a new government a couple of years ago, and what little gold we had left on reserve at the Bank of Canada was wiped away. We actually have no gold now. My thinking is that the government of Canada is quite comfortable with the gold we do have, which is still in the ground. And they'll just tax the living you-know-what out of it when the time comes when the price goes up. But it is a travesty, and it's a tragedy that the Canadian people don't have a currency represented by the potential to back it with gold if the rest of the world decides to go in that direction. But some interesting changes with regard to central banks and gold, and I'm shocked at how few people know about this. But I guess maybe that's why I'm doing what I do for a living.
That's right.
So if you're not familiar with who the Bank for International Settlements is, this is going to seem really weird for you. But the BIS is effectively the bank for all of the world's central banks. And so not only do they broker and clear and do all kinds of banking for the central banks around the world, they also establish monetary policy for those central banks, who then bring that information back to their respective countries. And the rule changes for banking filter down through the top regulators. Here in Canada, it's OSFI. You guys have the SEC, the CFTC. I'm not sure who else you've got. But anyways, through the regulators, eventually finds its way down to the banks. And so after the last financial crisis, the rules that they had for banking stability or banking viability, whatever term you want to use, they realized they'd made all kinds of blunders by giving a higher value to assets than they should have. The mortgage-backed securities, collateralized debt obligations, where you don't know where the underlying asset is and how many bodies are between you and that, and if one of them along that chain blows up, what happens? So they really had their, they really got shooken up in terms of recognizing that the old Basel II rules weren't adequate to properly protect the global financial system if we wind up in another Lehman event. So they scrapped the old Basel II system. They came up with a new one. And what was interesting is that it starts this year officially. As of January, basically every central bank or every country in the world, certainly in any of the developed nations, are going to be required to have much better standards than they did during the last crisis. And the idea is, of course, that hopefully that it prevents some kind of major global systemic event. Although because the situation's so much worse this time, I don't know if they've done enough. We'll see when that event happens. But what they did is they used to be able to value monetary gold on their balance sheets for the purposes of banking strength, and they could measure the value of that gold at 50% of market value. So if a bank had $1 billion in gold, according to what it needed to have in reserves, it was only allowed to report $500 million. So they realized that, well, gold has no counterparty risk. Maybe we should take a look at this aspect and revalue gold in terms of how a bank can use it to shore up its reserves. And so the decision was made under Basel III that gold is now considered what's a Tier 1 asset, which means it's fully valued, marked to market. They call it a zero risk weighted asset. So, and I've already been in communication with Canada's top regulator, the Office of the Superintendent of Financial Institutions, which will ultimately impart these rule changes down throughout the banking system, through the regulators and such. And the reality is that investors are going to get wind of this. First, it'll be the banks and the money managers, hedge fund managers, some savvy investors out there who like to read or watch reluctant preppers.
That's right.
Right? They'll recognize, hold on a second, it's being reinserted back into the monetary system on par with cash and US Treasuries and AAA-rated sovereign bonds. Maybe I should own some of this too. But we're not quite there yet. It takes time before these kinds of changes. But basically, yeah, gold, as of 2019, throughout most countries in the world, is being now treated by banks along with cash and AAA-rated sovereign bonds. Pretty incredible, in my opinion. But it's monetary gold. Can't be a derivative. Has to be gold in a vault or held in trust.
Yeah, that's guest after guest on our channel has talked about that if you can't hold it, you can't count it. And that's absolutely true. You talked about the counterparty risk and sometimes layers and layers of counterparty risk. So guys, check out that. We're going to include a link to that as well. Gold remonetization is much closer than many realize. So Brandon, before we wrap, if we could give you a chance to let us know what you do at BMG Group and where people can find out more of your work, because obviously you're putting out some pretty interesting articles on a regular basis.
Well, thank you. Yeah, I do a little side gig with Palisade Research, right for them. They're a division of Palisade Global, which is they focus on precious metal mining companies. But I like to write for them. It helps promote what I do on a daily basis. I work for BMG Group, and we're a precious metals company. We've got mutual funds for retail investors who want to take advantage of tax shelters and such. And we have a bullion bar storage program. We also actually have basically a reluctant preppers program for high net worth. Which is really interesting. I can't get into the specifics of it because it's sort of the secret sauce. But yeah, even it isn't. The people who are preparing for the future aren't just the guys hunkered down in mom and dad's basement with the drapes drawn. There's a lot of people out there who have some really serious concerns, and of course, the more wealth you have, the more options you have. And so we help out those folks as well. Get that peace of mind you need to sleep well. So yeah, if they want to reach out to BMG and find out what we do, go to bmg-group.com. Call the office. I would love to receive a phone call from anyone watching this. But yeah, this is so. In addition to probably the bulk of what I do is trying to give investment advisors and high sophisticated investment professionals and investors across the country the opportunity to examine things from a broader perspective, a bigger timeline, and to recognize that there's all kinds of different ways that you can hedge against some risks out there, and precious metals are just one aspect.
Brandon, any other ways that people can find out more of your work?
Absolutely. I almost forgot to mention, for about 3 years now, I've been doing almost every week, a video I call This Week in 3 Minutes. And it focuses on the capital markets and investing with a bias towards what's happening in the precious metals market. So if you go to This Week in 3 Minutes, Google This Week in 3 Minutes and look me up, sign up for it and subscribe, and you'll get a different take on what's happening out there in the investment world.
Well, thank you, Brandon. We've been talking with Brandon White. He's the Business Development Manager, Monetary Policy Analyst at BMG Group, Precious Metals Company in Canada.
I wish it was actually, no, I don't wish it was California.
Brandon, thank you so much for joining us this first time on Reluctant Preppers.
It was a pleasure. Thanks for having me.
Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.